And you know that sound. That means we are live here. Halftime report, tackletrading.com. It's 1/3/2019, Matt. And the big news overnight was Apple revising downward their guidance. The whole market selling on that. We've got some interesting intraday action. Let's just start with the lead. Let's not bury it at all. What's going on with Apple here today? And how did you interpret that news?
Just to get, if people are not informed of what happened with Apple, since it was obviously the major news that came out last night after the market kind of closed, and before the market closed, they halted shares on Apple with a pending announcement, and usually that's a negative thing, right? And they came out last night after the market, and Tim Cook basically revised Apple's first quarter guidance down by about 7%. And some people might think, oh, that's not much. They're still expected to make a record amount of earnings per shares, and they're still expected to make somewhere around $84 billion in terms of total revenue. But the problem was, coming into the first quarter, their guidance was around 89 to 93 billion. Now, Tim, let me put the importance on that. Number one, this is the biggest company in the world announcing slowing growth. Okay. And how many times have we talked about slowing growth in the last 3 weeks? It's going to be the headline coming in. It's a thing, and it's real, and it wasn't just Apple though. Delta came out today and did the same thing, lowered guidance. Okay, lowered first quarter guidance. So Delta comes out, Apple comes out, lowers guidance, and to give it some perspective, okay, Apple has not lowered guidance since 2002, at the bottom of one of the worst financial crises, and especially for a company at the time like Apple, which was, one of those tech companies back then, and the dot-com had just, blown up in price valuation, and it just got absolutely slaughtered coming out of 2000, 2001, and 2002. That was the last time that Apple had lowered their guidance. And so Apple comes out, lowers their guidance for the first quarter. Delta comes out, lowers their guidance for the first quarter. China has a recessionary indicator in the PMI report coming on Sunday night. And then this morning, we had our ISM manufacturing report came in at 54.1 versus an expected at 57.7, which was the worst number that we've had in terms of miss since the Great Recession, Tim. This is real. Slowing growth is here, and I don't care who is the cause of it. I don't care who's to blame. Everybody wants to blame somebody. Trump's trade wars and tariffs and tactics and uncertainty and whatever it is. But it's real. It's here, and it's going to be concerning.
It's concerning to me. There's no doubt about it. For a moment, I looked at Apple on the dip, and I'm like, well, is that a buy? And I like the company. And if you're a long-term investor and you want to buy it with a put to hedge it, it can be a buy here if you just flat out collared it right out the gate, Matt. But on a dip like this, it's still in a downtrend.
Never do that, though. Hold on. Yeah. You would never do. No, you're not going to buy a company with the intention of protecting that company. No, you protect a company after you've already purchased it and you've held it for years and you've acquired gains and you're protecting against loss. Now you're just protecting, against risk. I don't understand that. And I said this in the pre-production show when you asked the question. If this was not a gap down, but it was just a normal movement off a retracement, there's no way you would ask the question, should I buy Apple now after, a breaking of a short-term support level in a bearish downtrend? You would never buy Apple. You would look to short Apple. So I don't see this as a buying opportunity in any capacity. Now, would traders want to lock in profit and take the gift to the trading gods? Yes, absolutely. That's a different question, though. But would you buy Apple here? No, I think you're still catching a falling knife.
Yeah, it would be obviously a very aggressive gap fill type strategy. And I honestly don't think it's there yet. The reality is, and in these downtrends, Matt, you're going to have many different circumstances over the next year where you're like, is that a good value right there? It's a natural thing that we do as consumers.
It's a good value when you see a double bottom and a double top and a breakout of resistance.
Until you actually see that.
That's when you see it.
Mm-hmm. You got to get those reversal signals.
Because it's coming down, and you don't buy it simply because now it has a cheap valuation. Tim, unlike Facebook and Google and Amazon and whatnot that had high valuations, Apple's had a fair valuation for years now. You're not going to just, and all of a sudden, it's like, oh, Apple's cheap. Apple's been cheap for 5 years. Correct. I don't think Apple's P ratio has been over 30 one time in the last 5 years. So now now that it's at 13, it's like, oh my God, Apple had a 9P ratio, I believe, a year and a half ago. So now
It can go lower.
a
There's
13
no doubt.
ratio. No, of course it can go lower.
Yeah. You and I, we got on the phone. You called me and you're like, hey, have you seen what's going on with Apple? And I hadn't heard yet. And you told me about the lower guidance. And I'm like, well, that's a concern. Obviously, not just for Apple or the market. And the whole market is respecting that. That's why we're down over 2% on the indexes here today.
You know what the shocking move was, though, last night, Tim? Was not in Apple.
Yeah.
It really wasn't. Apple down 7%. We're going to wake up. Apple's down 38% off the highs, right? So that wasn't the news, in my opinion, or the shocking movement wasn't Apple. The shocking movement was in the Japanese yen. That was the shocking movement. And I remember I put it out on Twitter immediately, like 5 minutes after the Apple news happened. I said, what the US dollar, Japanese yen flash crashing now? You know, and all of a sudden you saw headlines come out and they're like, oh, flight to safety, flight to safety, flight to safety. I want to ask a very simple question to the halftime crew, okay? Is this really a flight to safety when the entire movement was done in 10 minutes? A 400 pip movement to the downside, the biggest movement since 2016 in the Japanese yen. Is that really a flight to safety?
No, clearly it's not.
No,
you don't have flash crash 400 pip movements and call it a
flight to safety. Who are these idiots online writing headlines that, oh, the flight to safety in the Japanese yen? It's like, really, in 5 minutes after an announcement that nobody was prepared for, all of a sudden everybody in the world woke up and went and bought the Japanese yen? Come on. That is high frequency trading systems, algorithms. And I'll keep coming back to it, Tim. At some point, we have to have, as a society, discussions on how algorithms play a role in the financial world. Because this is not normal behavior. That is not okay in any capacity as a currency trader, Tim. That will whipsaw you and knock you out in a heartbeat, and you're not trading currency any longer. We have to have discussions as a society how these algorithms do play a role in our financial markets. So you look at the flight to safety, but I want to show you something, and I'll tell you this is why this is all algorithm driven. Look where the low hit, T, before you had that rapid price increase right back up, right into the very tick of the low of March. I mean, it's insane. It's insane. So the price move in Apple, I mean, that's par for the course in a bearish downtrend. I'm not too shocked by that. But the 400 pip movement in 10 minutes on the yen, and it wasn't just the dollar against the yen, Tim. It was every currency against the yen. It was the New Zealand dollar, the Australian dollar flash crashed, the British pound flash crashed against the yen. Every currency against the yen flash crashed. And again, it's not normal and it's not okay, in my opinion. And as a society, we absolutely have to have discussions on the value of high frequency trading systems and algorithms in the financial world.
Do you invite
Matt Justice 2020 on that stance right there?
I agree, but here's the
I
problem.
don't think the common individual in America would understand anything I just said.
Well, and that's my next question, Matt. Do you invite the people to the table who have benefited the most, the people like the JP Morgans and Goldman Sachs, and throw it at their feet and say, guys, listen, you're going to ruin the market. We've got to regulate it. We've got to do something about it. Or do you just have those conversations with people like the SEC, which, by the way, have not shown a lot of interest in regulating algos over the years?
You have those conversations with our elected representatives.
Yes. But the elected representatives are being lobbied by who? Yeah, they're being lobbied by who?
It's not going to change overnight. Yeah. But as more people become aware of some of what's happening, guys, flash crashes happen in the financial world every day. Every single day. It's not just these radical, crazy movements we see. They happen literally every single day in individual stocks. And a lot of them you never notice because they're illiquid. And I will say this, the price movement on the yen did happen at a moment when the Japanese market was not open yet. And the Japanese market was still closed because it was still overnight. And so it happened in a very illiquid time for the currency market. Because if you guys remember, once those U.S. banks close and the Japanese and the Australian banks open, there's still about 3 hours lag between that time period and when the Japanese markets open up. And so it's a very illiquid time between really kind of that 3 o'clock my time, 5 o'clock my time, and kind of 8 o'clock time frame. That's a very illiquid time in the Forex market when the only bank you really have open up is the Australian and the New Zealand bank. So it did happen in a moment of illiquidity, in illiquid nature. But at the same time, that is a radical movement in the currency market.
Yeah, it really was. It was pretty incredible. Give me EEM if you would, because it's tied into Apple. You know, the letter that Tim Cook put out there, he talked about how all is not well in China, how that iPhone sales were in decline in some of the developed markets. The bear market in international markets has been going on for almost a year now, Matt. You know, it's now pretty much a lot older than whatever's happening in the U.S. There's no doubt about it. We knew that this weakness would come to bear at some point. Now it's making an impact on Apple Computer, the number one company by market cap in the world. You know, if this downtrend continues, we're going to see a further depression here into the bear markets and further selling, in my opinion.
That is absolutely shortable underneath 37.5.
Yeah.
I do want to give you a couple quotes out of that Apple announcement very quickly. Shout out to Cody for putting them into the halftime prep today. Most of our revenue shortfall to our guidance and over 100% of our year-over-year worldwide revenue decline occurred in Greater China across iPhone, Mac, and iPad. Furthermore, we believe that economic environment in China has been further impacted by rising trade tensions within the United States. China lower than anticipated iPhone revenue, primarily in Greater China, accounts for all of the revenue shortfall to our guidance and for much more than our entire year-over-year revenue decline. You will not see a more specific target than that coming out of Apple, that the trade wars has had an economic impact on U.S. companies. Mm-hmm. We have not seen a more direct statement from a company regarding those trade wars and the impact. And now we're seeing it with Delta today. And now we're entering into first quarter earnings season coming up later on. It's going to be a theme throughout the entire first quarter. Every company who is going to lose out on earnings per share, who's going to miss on revenue, they're going to use the exact same excuse that Apple just used last night.
It may become the theme of the earnings season if this does persist.
Tim, I do want to toast you really quick. You see this?
Yeah.
You see this?
Is that a green drink?
It's a green drink.
I like it.
It's a green drink.
C'est la vie, my friend. I like it. What's in that green drink?
You don't want to know. You don't want to know. Celery. I know it's a lot of celery.
Are you drinking the green drink out of a wine glass?
I am. My wife gave me the green drink out of a wine glass. She did.
Hey, man, whatever's clean.
She brought me this just barely and handed it to me. And she says, quote, you guys couldn't see her, but she said, "You better drink this." And so I just want everybody to know that I have evidence that I am drinking my green drink today, trying to be more healthy coming into the new year. New Year's resolution. Happy New Year, everybody.
Happy New Year as well. And, the thing about green drinks, Matt, is that you don't have to know what's in there. It does sound disgusting, but if it's good for you, you got to trust your wife and go with it. There's no doubt about it. S&P 500, let's break down the markets technically one step at a time here. Start with the ES. Obviously, Apple, a huge component in the ES. We've got a bear retracement set up. This was a real setup for all of those bear stocks on the option report and the stock report, Matt. And with the selling, a lot of those triggered here today. There's no doubt about it. Beautiful trading day. There's no doubt. But now it's coming off the bottom. What you read technically?
Oh, it's par for the course too.
Yeah.
I mean, selling overnight, buying coming into the open. Look for the selling to come into that last 30 minutes of the trading day. But the buying off the dips the last 2 days not going to stop me from shorting stocks that are triggering into short positions.
Mm-hmm. Yeah, one of the top gainers on the S&P today will be one of the last days it trades until they get settled out is Celgene. They actually were a takeover candidate. Bristol Myers came in and bought CELG. Big, huge gap to the upside.
Yes, they did. Celgene got bought out by Bristol Myers. I want to say the merger was for $74 billion. Is that right, T? $74 billion?
Something like that.
33. Celgene up 24% so far. It was up 33% earlier in the day. Bristol Myers, the company who is buying them out, typically will see a decline in price. And as you can see, they are seeing a 12% decline in price for their buying of Celgene, another big merger in the biotech sector, no doubt.
As I'm looking at these, it's always a good way to kind of teach this concept, by the way. The purchaser of whatever the deal is usually is going to take a hit in the stock price. That's because they had to pay a premium to acquire Celgene. But more importantly, from an indicator standpoint, Matt, when I see a $74 billion deal in the financial markets, money's still fairly cheap. I mean, obviously they can still do that.
Listen, this price movement in the market doesn't have anything to do with the fact that companies still have money to them.
Yeah.
Apple is down 38%. It has more cash on hand than any company in the history of mankind.
You had something I
did
crack up today.
You gotta tell the halftime crew what I asked you.
We got online and we're sitting here talking about the markets. Matt and I do that every day, obviously. And he said, can Apple go lower than the $250 billion it has in cash? And I'd never thought of it like that. Can the market cap drop below its actual cash reserves?
now, mind you, I don't think it will. Okay, that's not what I was saying. But we were talking about, companies that have the ability to trade under their book value, right? And what the book value is, for those of you who don't understand book value, what book value is if you take all the company's revenues and you take all the company's liabilities. For example, let's say you have $10 billion in revenue and you have $8 billion in liabilities, your book value is $2 billion. And so if the company's price ever goes down to $2 billion, you're trading at book value, and everybody's like, well, why would it go lower than book value? They could sell the company right now at that price, but companies can trade lower than book value. So I asked a random, arbitrary, just kind of to spark some debate, can Apple trade under their cash value? Because we've never seen that. Now, I don't think they can either, Tim, but I'm just saying we're seeing some pretty crazy price movements in the market, and it has absolutely nothing to do with fundamentals or valuations or, cash value or anything.
I've got to acknowledge something in the chat here, Matt. Adi, welcome, my friend. Always.
Welcome back, Adi.
There's no doubt you are a member of our team, and we're always here to support you. By the way, he says, I can't remember the third one. This was actually Matt's original message that I used and co-opted as well whenever we teach classes. No negativity, participation, and have fun. Adi. Have fun. Everybody say welcome back, Adi. It's always good to have you, and great to see you in halftime.
Whenever we're teaching a class for our partner Legacy Education, those are the rules.
Yeah. I don't put up with garbage.
No, we don't put up with negativity in any capacity. Get the hell out of here.
Not worth it.
No, if you want to be negative, go be negative somewhere else. It's not going to be with us.
Yeah.
So that's number one. Number two, you got to participate. Okay, you got to show up. That's half the battle. You got to show up. You got to engage. You got to participate. And I tell the joke about how Maverick and Top Gun was getting yelled at by ICE to engage Maverick. Engage. You got to engage. You got to participate. You can't expect good things to happen in your life if you're not willing to engage. Number
Is that
three,
a good movie?
It's a fantastic movie. What are you doing? Get out of here. Okay. And number three, in life, all things, you got to have fun, no doubt.
Oh my goodness. I saw that M&A deal obviously caught my eye because Celgene was one of the companies that I was looking at. I think they're an interesting company. There's no doubt now they're being taken out.
I know it's up 24%, but it is a little weird to see a lot of profit taking happening in Celgene and Bristol Myers gets sold off. I'm not sure big mergers in a bear market's going to help.
Well, and now you're going to see Doji convention, by the way, where it's not going to settle into a range unless something falls through with the deal.
If the merger goes through, it's done. You're not trading Celgene anymore. No,
you take it off your watch list. There's no doubt. As I'm looking down the top gainers in the market here today, AAP is coming back up. Matt, give me a look at that chart on the S&P, up 3%. Not a bad looking chart. I know it broke down technically, found the 200. Now we're rolling back up here. Relative strength. You got to give it to him.
Anytime I see something like that, you got to switch to a weekly chart. Not tradable underneath 171.
Correct. It's not triggered in yet here, but you have to give him a little bit of respect here with that upward movement.
I could definitely understand somebody putting this stock on the watch list. Absolutely.
Yeah, GILD catching some of the tail end of whatever happened with Celgene, it looks like.
Yeah, Gilead get a little bit of bump.
Get a little bit of a bump here as well. Some of the top losers, obviously Bristol Myers down on the merger news. Skyworks, Apple Computer, AMD down 7% here today. That's why we call it dirty, sexy money, by the way. 7%. And look at that. It's not even a big candle.
that's honestly, that's just what
it may be in the range. What is the ATR?
Let me add ATR to it. Okay, I have the ATR on it, actually. ATR right now is $1.30. $1.30. I mean,
yeah,
you're you're honestly not that far outside the range, D.
I will say though, that's one of my favorite setups right there. That's a breakdown retracement.
Just off a 200-day moving average.
Oh, I love that. I'm going to trade that now.
That's a good one.
I do like AMD at some point this year for a covered call position. Obviously not here on a red candle when you're in a downtrend.
Speaking of dirty, sexy money, Tim, I want to show you something.
Okay.
This is the new PDF that we did for the Tackle 25 in 2019. Okay. Here's the Tackle 25, dividend fireworks, poor boys covered call. And there is the dirty, sexy money list. Okay.
AMD.
Dirty, sexy money. And then here's all the covered call stuff, based on all the different modules. There's about 42 pages of great content. So make sure everybody downloads the new PDF for the Tackle 25. And you can get that PDF, guys, for all you pro members out there. Let me find it very quickly, T, but you can get that if you simply go to courses, Tackle 25. Obviously, that's for the mastermind group. This is for the actual system. And you scroll down and you can download it right there. So here's the modules right there. You can see them all the way down here. There's the download of the new Tackle 25 list.
Yeah, and I actually, we've seen quite a few students even start the course here yesterday and today, Matt, first day of the release. There's no doubt about it.
We had quite a few students start the course before we even made the announcement that the course was live.
It's true. They found it.
I love our students. I love our community so much.
And not to put a bar out there for my halftime crew, but I've also had a few students finish the course in its first day out there in release. So,
I'll agree. Justin just said a great job on the modules, Tim. You did an absolutely amazing job on those modules. I will tell you, editing, I'm not editing it again.
No, you've now become our official editor. I don't know if you know that.
I don't know if you guys know this. The CEO of Tackle Training is also the chief editor in charge as well. I edited those videos.
Yeah.
In fact, I think my editing job should get some award. I think it should.
Well, you run the Department of Cool, and so we always got to get your eye on it, and that's what it is.
I like it.
Yeah.
They love me, Brian Fuller. I love that too. But no, Tim, in all seriousness, that PowerPoint, the modules, your recording of them, they are fantastic. Well done.
Come on, you and I both know it's a team effort. Everybody was working on that thing. So,
yeah, but everybody knows Axl Rose is the leader of Guns N' Roses, or was the leader of Guns N' Roses, right? But they can't name the other guys.
Slash, Matt.
Well, yeah, you can.
Everybody knows Slash. The top hat, the hair. Come on, okay. I actually think Slash might even be
my analogy. They know the lead singer. You were the lead singer. You did a great job.
Oh, all right. Let's move on to the Dow Jones Industrial Blue Chip Companies. By the way, on the S&P today, the advanced decline line on the entire market is about 50-50. You do have a mixed market. The heat map is uglier than the advanced decline line indicates. More selling pressure, market down about 1.5%, Matt, but we did come off the lows there. The Dow's showing us some of that interesting action as well. I don't have a lot of gainers on the Dow here, mostly down. Advancers 2, decliners 28. Verizon and Walmart are two of the only companies that are up here today. Give me a read on the Dow.
Same read I had on the S&P. Until these, and I say that every single day, but I mean, what do you want me to do? They're the same charts, and until this market starts decoupling from one another in the indexes, you're going to get the same reads.
Mm-hmm. Yeah, I agree with that. Give me a quick peek at those two companies that are up. Walmart, I do like. I have publicly talked about Walmart quite a few times the last year or so, that I do like where they're going as a company. I know the chart is pretty untradeable at this point. I don't even know where it's heading from here.
At this point, however, could you see a double bottom at 90, or excuse me, a retracement down to 90 and a potential break in 95? I could buy that.
Yeah, but I think I'd rather buy a breakout at 100, quite frankly. That's
a legit signal.
That's a legit signal. Yeah. Obviously stuck in the middle right now until we see more. The old Steelers wheel song. Verizon up 1% here today as well. VZ dividend coming up.
Yeah, ex-dividend coming up just shortly. No, you can't buy Verizon today and get that dividend in a couple of days. Just want to make sure we're clear on that.
Does not work that way. Then obviously the biggest loser is Apple. Intel's down 3.5% though, Matt.
Well, Tech's killed.
Yeah.
NASDAQ got beat up a little bit harder than the other indexes, down about 2%. But so far, basically a doji after the cash open today.
Yeah. Boeing down 3, United Tech down 2.6, CAT down 2.5. You've got weakness in industrials. You've got weakness in tech. A lot of the aggressive areas. You've got a sector rotation really going on here. It's going to be a very important week for the market scoreboard inside the Tackle Trading newsletter as we break down all the different sectors. Obviously, a lot going on with those. I like Staples here, Matt. In some ways, it's not really tradable. They had moved bearish recently, but I'm looking at Coca-Cola, Procter & Gamble, McDonald's. They're all holding up relatively well. Bear retracement on the pivot. No, you can't really play that, obviously. A lot of weakness across the board.
There is. And yeah, these sectors are going to start forming patterns and trends one way or the other. But a lot of these sectors, eight of the 9 sectors look almost identical to.
Yeah, they are. And really the only one that's standing out is utilities, from an upside perspective. And that's more neutral, if anything. I'm still bearish on the market. That's my personal market bias right now, just seeing weakness across.
I'm slightly bearish on the market right now.
Yeah. All right. Moving on to the NASDAQ 100. A lot of going on with the FANG stocks. You had a very interesting question in the pre-production, Matt. You said which of the, and by the way,
let's ask the halftime crew. Let me ask the halftime crew.
Yeah, go ahead.
Okay. Of the FANG stocks, and we're going to put Facebook, Apple, Amazon, Netflix, and Google. Okay. And unlike Mark in our prediction podcast that came out this week, Tesla is not a FANG stock. But in terms of those FANG stocks, which one of those FANG stocks would everybody consider the most defensive in nature? So again, you got Facebook, Apple, Amazon, Netflix, and Google. And while everybody's answering here, Tim, which one would you consider the most defensive by nature?
I answered Google is what my answer was. And I know that there could be a debate, but that was my instinct, Matt. Google, just because I think that, first of all, Apple's got a low PE ratio, tons of cash. You could make an argument for them, but they just lowered guidance. And you're talking about a consumer product company.
Apple can't be considered defensive when they sell $1,000
iPhone. Yeah, that's exactly right. And then Facebook, I know that they've got consistent revenue and their PE ratio has come down to become much, much more attractive. I just think they've got more risk. And I know Google's had some of the same scandals with data and breaching. And man,
but they don't have Mark Zuckerberg, who everybody hates.
I just think people will always use the products Google has, unless something really dynamically changed. I know that they've got Gmail, Google Drive, all the search, everything they do there, they are just so locked into the way people and consumers use the internet, and they've won that fight for a long time.
The correct answer is none of them.
I agree.
That's the correct answer.
Because real quick before you get into that, do you know that Google can predict flu outbreaks based on their searches? Like almost to the day, they can predict when outbreaks of disease are going to happen based on what people are searching. They have some powerful information.
I get scared as a good old fashioned person who believes in my own personal liberties and privacy and all that. That scares the dickens out of me. But good that they can predict flu pandemics. Now, my argument on the 5, okay, because we're really talking what is the most defensive of aggressive is what we're talking about, correct?
Mm-hmm.
Okay. And the reason I brought that up is because I read an article today that basically stated that Google was the most defensive of those companies. And I certainly understand that argument. I'm going to make an argument for Amazon. And the reason I'm going to make an argument for Amazon, despite the fact that it has high valuation in terms of PE ratio in comparison to Apple. I mean, Apple's PE ratio is what, 13? Facebook's is 18. Google's is 26, I want to say. What's Amazon? What is Amazon's right now? It's like
look at the multiple. 100. Yeah.
So I understand that Amazon from a valuation perspective is much, much, much higher. But if you look at the products they sell and how they try to, foster in a cheap consumer environment, have a defensive company in terms of cheap retail products in comparison to, say, an Apple, for example. So a cheap retailer, right, who you can buy cheap retail goods the same way from Amazon as you can from Walmart. Number 2, their AWS is massive, Tim. Amazon Web Services is absolutely massive, right? So I think Amazon would actually, from the way the company is built, be considered a little bit more of a defensive. Netflix lives on AWS, no doubt about that, Nicholas. I agree with that. Amazon AWS is growing. It's one of the biggest growth areas of Amazon's business model. So I would say Amazon, followed by Google, followed by, I'd probably say, okay, Amazon, Google, who am I missing? Apple, Facebook, and Netflix. I would say Facebook, Netflix, and then Apple's the least defensive of them.
But the right answer is none of them.
They're all
that you said a minute ago. I mean, think about it, Matt. Every one of those companies could get cut 50% this year if we moved into a real bear market. Amazon, particularly.
First of all, they all should.
Yeah.
Yeah. We're not talking about a utility stock.
No, they don't pay a dividend.
We're not talking about a food company.
Right. Yeah.
None of those companies you actually need to live your life. They're not defensive.
All interesting companies, obviously. There's a reason why we talk about them so much. I love Amazon, and at some point, yeah, they're going to be a fascinating company to target.
Amazon's taking over the world.
They may very well be. Let's move through some of these tech companies that are moving here today. Obviously, Apple, AMD, we talked about. ABGO down 6.7% as well. These chip makers, Matt, all showing me bearishness. I liked Broadcom's earnings report.
All those chip makers are prone to China news, though.
Yeah, it's true.
Every one of them are.
Yeah.
Negative China news that impacts Apple. Every one of those chip makers going down on that.
Some of the airlines are moving pretty heavily as well. AAL is plunging here, Matt, 7% midday after the Delta guidance. You know, it's one of those deals where obviously that was a bear retracement setup, old support, new resistance, selling very aggressively. If you were in a short position, that's a profit-taking opportunity right there. Take the gift. You got earnings coming up, but airlines are selling across the board, it looks like.
Well, yeah, I mean, it's going to happen. Delta comes out. They're the biggest airline in the U.S. They come out to talk about slowing growth. What do you think American Airlines is going to do? They're going to do the same thing. The only difference is it's if you're not already shorting Delta based on the retracement or based on this price movement, it's tough to chase that as it's already down another 3 points off the breakout channel. If the airlines are going to show weakness, I think a close underneath 29.50 for American Airlines is perhaps a better short opportunity.
And let's move on to RTY if we can. Let's take a look at small caps. Obviously, small caps are going to be more volatile in nature, but actually not today. Kind of a light range candle showing some strength coming back up. And it's really a tough one here, Matt, because you're in a bear retracement pattern. But I could see that trade all the way back up to 1400, 1450 even, and still be a bear retracement. So technically, it's a little bit difficult here in no man's land without a lot of triggers. What's your read here on RTY?
It hasn't confirmed yet. Confirmation for me, it's whenever you see something like this, a little consolidation, just drop that into a 15-minute chart. Confirmation has to be under 1324. So to confirm on a bearish retracement on the downside, RTY would have to close underneath that level.
Yeah, I'm seeing that as well. Move on to the dollar, if you would. I saw, the Fed funds futures, Matt, actually priced in a higher potential for a rate hike after that Apple news. Slowing global growth and the potential for a recession. Investors and traders are thinking maybe the Fed could even cut, as well. The odds of a cut also rose.
They're not cutting. That's hopeful. That's wishful thinking. They're not cutting. Okay. They're not cutting based on what we see today. Right? 3 months down the road, we get some nasty Brexit news. We get some nasty China news. Market's down another 10%. Could they start discussing cutting? Yes. But Tim, I'm going to tell you right now, if the Fed cuts rates in 2019, the market will sell. And people who are watching this might be like, well, why would the market sell on the Fed cutting? Because if the Fed cuts, what does that tell every single one of us in the United States? They're worried about a U.S. recession.
There's a lot of interesting action with the dollar, Matt, and it is fading lower. I agree with what you were talking about when we were chatting about it earlier, that over the month of December, we're seeing subtle change here below, the high points. But until it breaks support, it's not bearish, is it?
No, it's not. And you got to put a close under 96 as support. You got to put it under 96. But in terms of this, Tim, it just feels like it wants to sell. It just does. Look what's happening here. You see this rotation happening. Look at the price movement here. So yes, it's still neutral in comparison to the last month, but you start to see this start to dip even lower, lower, lower. You got the 20-period moving average now crossing the 50-day moving average, which shows you the average price of the last 20 days is starting to decrease more than the average price over the last 50 days. So short-term momentum is starting to come into the bear side of it. And a close under 96, you would have to say this is now in a short-term downtrend. Right now, still neutral. But if I'm using my yardage marker on the tackle scoreboard and I have right there 50-yard line as neutral, I'm probably on the -40 range with a break going into the -30.
Yeah, I would kind of concur there. Obviously, defer to whatever your take is on the dollar, doing all the Forex research you do on a daily basis. But the breakdown below support would even push that even lower, don't you think? Down to 35 or 30 and tradable, I'm sure.
A break under 96 is absolutely tradable. So when I'm looking at the scoreboard and you have something ranked at 40, either a -40 or a +40, that is because we anticipate a breakout or a breakdown. And if it breaks down, that automatically, in a short-term trend, that automatically pushes it down to -30 into the slightly bearish category. Secondary confirmation might push that down into -25 to -20. Very rarely do I get in the -10 or +10 area in the currency market. The currency market doesn't behave that way. So so in terms of that, yeah, right now, most likely would have it as a -40. A break of 96 would be a -30, and that would absolutely be shortable.
You know, we've got earnings season coming up, and obviously currency markets, equity markets, commodity markets, they're all going to be driven by that. We'll have more on that next week as well. Let's move through all the commodities before we get into some of the lists we're going to talk about.
Answer Sam's question.
Sure.
It's a good question. He says, I'm curious to which one of the two, Amazon or Google, has better fundamentals in a bear market. The answer is neither one of them do. Both Amazon and Google have a history of going down in bear markets.
If the question is Amazon, Google, or liquor, Sam, it might be liquor if we go into a recession.
Yeah. So is Facebook a vice? Maybe.
It could be.
It could be. Could Google be a vice? Maybe. Right. Amazon, maybe. There's maybes to that, but there's no maybes to marijuana and liquor being vices.
Yeah.
Speaking of which, didn't we have a liquor company that made the cut to 25 or one of the lists?
Constellation Brands.
Constellation Brands. Yeah.
And the reason Constellation Brands made the list is because I did want a liquor company on the 25 in 2019.
Mm-hmm. Yeah. With the dollar here, one last thought, Matt. I'm looking at the economic calendar, just grabbed my attention. Obviously, we talked about Fed Chairman Powell's testimony tomorrow. That's happening, I believe, early. Is it 5 a.m. or something like that, our time? So is he speaking that early?
No way.
No chance, right? Unless he's overseas in Europe or something like that. Where is
No, that's Hawaii time. Sorry.
Oh, Cody.
Yeah, I was going to say, no.
That's Hawaii time.
Like 8:15 our time.
Yeah, 10:15 in the morning, and Powell is going to testify.
Powell's not getting up at 7 o'clock Eastern time to give a speech.
You know, you remember Brendan from back in the day, Matt, one of the coaches we used to work with, and he's from Hawaii. Great guy. And he used to say, I was done with my day by 10 o'clock in the morning, because he could trade the market, and being out there in Hawaii, obviously the time difference was an advantage for that.
Yep.
I don't want to get
up here 11 a.m. right now.
Yeah.
Very quickly, ISM manufacturing report came in at 54.1 today. We did have positive on the unemployment report from today. However, we had like 200 and let me see the numbers very quickly. I read it earlier today. I just want to get you the specific numbers. Mm-hmm. On the ADP non-formal employment change, that is private unemployment change, an increase of 271,000 new jobs. That was the highest year to date. Obviously a positive number. Labor market's still strong.
I'm sure that you're going to have this conversation with somebody over the next couple of days where they're going to say, well, the unemployment rate's at 3.7%. We've got a jobs report coming out tomorrow. ADP always highlights that. Why is the market crashing? And they're not necessarily correlated, point for point, obviously. But jobs market has been strong. I mean, that ADP number is no joke. That is a pretty strong number.
Hold on. I was responding to Blake.
Yep.
Oh, it wouldn't let me. Blake, what? No pot stocks on the 25? Funny. No pot stocks on the 25. A couple of years too early for that list. But 3 of the pot stocks made the last 145. And one of them did go on the Dirty Sexy Money list. Cron, C-R-O-N, did make the Dirty Sexy Money list.
Mm-hmm. Yeah, I like that Cron out of all of them. We had a discussion about them. The fundamentals. Tilray obviously was up
they're years away from being fundamentally to the point to be on a list like the Tackle 25. Dirty Sexy Money is exactly what it states. High growth, high risk, great cash flow.
Yeah, that's exactly right. Matt, there's quite a bit of data tomorrow. I'm looking at the economic calendar. We've got the risk of more volatility here. There's no doubt about it.
You got the unemployment report and you got Fed Chairman Powell tomorrow.
It could be a big day. It could be a big day one way or the other. Obviously, stay glued to your screens and make sure that you're running your routine each and every day. But tomorrow's going to be a big one as well. As we work through the commodities here, Matt, I want to go through crude oil and a lot of the energy ones. Look at crude, natural gas, then let's go to gold and silver and kind of break those down one at a time.
Yeah. Mm-hmm. Which one do you want first?
Let's do crude. Crude's always the biggest one. Bear retracement setup. I love this setup. Anything below 50 looks good. Anything confirming would be a great signal, in my opinion. You finally have light range candlesticks developing here, Matt. What's your read?
Very similar to my read yesterday when I said it reminded me of what was going on right here as the 20-day moving average is catching up to it. I don't think it's tradable yet on the buy side or the sell side. Any buy has to be above 50, and quite frankly, any sell, we got to get a little bit more downward movement. I still think the best trade here might be a breakdown of that 42.36, but if we do retrace up to 50 and pivot, that might be good too. So I don't think there's a trade yet, and it could be within the next week, but I just don't think there's one yet.
Our oil inventory is coming out after the bell here today. I read that the API is releasing their weekly report after the bell at 4:30 Eastern, which is really, really strange to me. With this government shutdown, some of these economic reports have been coming out at odd times and some not even coming out. Yeah, interesting. You know, your brother, Mark.
See that report on the Forex factory.
I read it in investing.com and the top 5 things. It's not listed. Yeah, they've moved things around. So you could get volatility after the bell here as well. Your brother Mark made a very, very good point when we were chatting this morning, the 3 of us, and yesterday as well, that the focus on crude, and crude really can't form a bottom until U.S. inventories change. I know that all the discussion has been about Saudi Arabia and OPEC and global growth and all that kind of stuff, but U.S. stockpiles are still very, very high, Matt. We've had a gluttony of supply for quite some time, 2-3 months now, and those reports are going to start to make an impact if they did change, but right now we have oversupply.
OPEC can't put a bottom in oil simply through cuts.
I agree.
Could they put a short-term bottom? Yes, but they can't put a bottom simply by cuts.
I agree with that 100%.
You have to see increased demand around the world, and I get it. It's slowing down. I do understand that, but with the recent data coming out of Apple, Delta, China on Sunday, the PMI report today in the manufacturing, or excuse me, the ISM PMI was the China report. ISM manufacturing today, slowing growth around the world. Demand's not going to just magically appear to you.
Mm-hmm. Yeah. No, I agree with that 100%. OPEC will try, and that will be a theme throughout the first 2 quarters of this year. But I will say this, and I said this on our prediction podcast, oil in 2013 and 14, it was down 40% and then down 40% again the next year. It can absolutely continue to sell aggressively here for quite some time. In fact, I think you had
if those cuts were legit, Tim, wouldn't oil be up more than 14 cents?
Man, I'm sure oil traders
believe those cuts.
Yeah, I don't think the market does believe them. There's no doubt.
No.
I will tell you this, natural gas only down 1% is a light range day for that commodity. There's no question. I still have a lot of interest in it.
Must be down. Must be cold outside.
Is it cold? It has been cold. Oh my goodness. Yeah.
Must be hot.
It's in free fall, Matt. Not tradable. I've been saying that for a month and a half now. It's not tradable. This is the
best analysis you'll have on natural gas. It's either hot or cold outside, and I have no clue where natural gas is going to go.
Yeah. At some point, I'm going to love it. I'm going to get interested. There's no doubt. but not quite yet. Gold is up again, and this is an example where I took profits way, way too early here, Matt. I was back down at the 1260 range or so. Now here we are, way up, at another pivot high. Is this a profit-taking zone if somebody was long gold? We're approaching that 1300 mark.
Oh yeah, absolutely it is. Your RSI is overextended. Your range up on your potential average yield, and you're approaching a major target in 1300. So to me, at profit taking between 1293 and 1300, yeah, that's okay. There's nothing wrong with that. You could always rebuy as it breaks 1300.
Yeah, that would be a new trigger. There's no doubt. Silver also up about 1% today, hitting 1577 on the March contract in the futures market. Silver was one of our trades of the month last month. We talked about it all the time, waited for the breakout, hit it, talked about it again, and now we are running here. Silver is one of my favorite commodities and metals.
Yeah, silver approaching its first target at 16 by 1620 as well.
Yeah. I think we had that in the commodity report as a target. Really, really good signal there. Really good move in the metals market. And Matt,
and for anybody that missed out on that breakout of 15 on silver, you probably hadn't been watching the halftime report for the last 3 months. But anybody that did miss out on that breakout on silver, remember, you don't need to chase gold and you don't need to chase silver. Things don't go straight up. They go up, they retrace down, they go back up again. And so as we're range up here, yeah, you don't want to chase this, and you certainly could start locking in profit as a swing trader. And if you're not into it in any capacity, wait for it to slow down. Wait for it to retrace back down, Tim. And I'm going to tell you right now, there will be a very, very good buying opportunity on both gold and silver literally within I would say the next 2 weeks, I would say, is going to be a really good trade signal. So patience is the name of the game on silver and gold. If you missed out on that first run, there's going to be a second run after that retracement.
A couple of stocks from the option report setting up for triggers and moves here. Dollar Tree, T Rowe, and MCO are all triggering here today. DLTR broke out.
It actually triggered yesterday, and perhaps you can even make an argument on Monday. But T Rowe price, right? That's definitely a trigger on the downside today on T Rowe. Confirmation under, I believe we had confirmation under 90 on that one. I'd have to go check, but that's definitely a trigger. And what was the third one?
Oh, Moody's, one of the evil empire.
Oh, Moody.
Yeah.
Oh, Moody. What is that? MCO, right? Yeah. Oh, Moody's. Obviously named after one of our favorite individuals in the history of mankind, Bo Moody. And we did have a nice little short position on Moody's in the scouting report, and that's triggering as well.
Obviously those reports are a big part of what we do on a week-by-week basis, but this new edition and the focus we put on the Tackle 25 is more for our cash flow and position traders, Matt. One thing we wanted to do here on Theta Thursday is kind of highlight those new lists, right? Because we have some new additions to the list.
We do.
Yeah, why don't you break that down and explain it to the crew here?
Some new additions to the list here. And we've talked about this recently, and let me just kind of walk you through it very quickly. So once again, next Wednesday night, we are having a mastermind group for the Tackle 25. Tim and I will be there, and we're going to co-teach that Tackle 25 mastermind group next Wednesday at 8:30 p.m. Eastern Standard Time. And we're going to go through each stock on the list, explain each stock, why we added it to the list, all the detail that we don't do in the halftime report. We're going to do that for the pro members of Tackle Trading. But I do want to just talk to you very quickly, Tim, about the new list. And if you'll open that file, it's just a zip file is what it is. And then you can see right there, it's got the Tackle Theta research, and it also has the Tackle 25 covered calls. There are 4 lists to the new 25, Tim. You have the Tackle 25, you have Dividend Fireworks. Now let me explain each one of these. The Tackle 25 is our list of fundamentally strong companies that are extremely liquid that you can do covered calls on. We consider this list a growth list, but the primary purpose of the list we don't consider this a primary growth list. The primary purpose is it's good companies, strong companies, fundamentally fair companies that have that are liquid enough that you could do a lot of good covered calls on. And so that's what the Tackle 25 is. It is the primary list by far by far. Now, the second list is what we call dividend fireworks. Dividend fireworks is a list of companies that we really like, that are fundamentally strong, more safety. They're more safety plays. And so if you're concerned about a bear market, these stocks are more safety than, say, you know, your tackle 25 is. Your tackle 25 being a combination of fundamentally strong plus a little bit of growth, because the ROI we're projecting on the tackle 25 is typically 2 to 3%. On dividend fireworks, the ROI projection on the cover call is only going to be about 1 to 2%, but you're going to get paid a healthy dividend. There's safety companies in that. The third list is what we call poor boys covered call list. And as you can see, you'll see some mainstays of the original tackle 25 here as well. BABA, Biogen, Google, MasterCard, Netflix, NVIDIA, Ulta have all been companies that have been on the tackle 25 at some point in the last 4 years. But because of their high dollar nature, what we decided to do is to build a poor boys covered call list. A lot of the same requirements to go on the tackle 25 would go on to the poor boy covered call list. They're just higher dollar in nature. And because they're higher dollar in nature, they're going to basically be, you know, buying 100 shares a little more expensive. So you might want to look at something like a diagonal calendar spread or a horizontal calendar spread instead of a typical covered call in that capacity. And then the dirty, sexy money is exactly what it is. It's dirty. It can be sexy, but you have the combination of those both. These are stocks that are great covered calls, typically average more than 3 to 4%, sometimes more than 4%, especially in volatile conditions. But dirty, sexy money are high growth potential, high cash flow potential. But we all know with high growth, what that also accompanies. Stocks can get beat up on that list as well. But again, some people love covered calls. They love the volatile nature of some of these covered calls. And you'll see some of the stocks on this list that were on other ones, like Barrick Gold, which is now traded under Rand Gold. We need to make that change. They got bought out just 2 days ago, Tim. So we need to change that to GOLD. So will you please message Christian, change that to GOLD and get that updated? So it's not Barrick Gold and Rand Gold merged. So just in case you guys didn't know that, Barrick Gold, Rand Gold merged, and now they are Barrick Gold. And so Rand Gold, Barrick Gold is now just one company. So we just need to change that. And then we obviously go through all of the different, I mean, guys, the reality is the beauty isn't the list. The beauty, these are just watch lists. The beauty is in the mastermind groups, and the beauty is in the system. And that's the homework I want to give everybody over between now and next Monday. I want you guys to go through the Tackle 25 premium system. Okay, everybody that's a pro member currently has access to it. Like I said, anybody that joins us in the future, that will be a paid system. But for pro members that are currently pro members, you have access to the system and just go through each module. And as you can see, Tim, when you launch the lesson, here's the write-up. So here's the video for the lesson. So once you launch the lesson, here's the video for the lesson. Here's the write-up for the lesson. A lot of these are in the PDF as well. I mean, this is just the write-up of the PDF. So write that, and then you can take the nice little lesson quiz. And let's see if we can get one of these answers here. Call option basic. Okay, I want to see if Tim can get this call option basic. In options trading, the strike price represents what, Tim? The price at which the brokerage firm has the right to sell the underlying, the price at which the seller has the right, the price at which the buyer has the right to sell the underlying, or the price at which the buyer has the right to purchase the underlying asset.
Well, it feels like the broker can pull tricks on me quite often, but I know that A is not correct.
A is not correct.
Yeah.
But anyways, so you answer all these questions, and then you pass the quiz, and you go on to the next one. I love the fact that people have to pass the quiz before they go on to the next lesson.
You got to be able to get the questions right. Make sure that you retained it. Yeah. I mean, did you learn, and here's a couple things I will say about the Tackle 25 that I'm so excited about in 2019, Matt. The mastermind group that you and I are going to start next week. We've been doing that in the past, but now we have the opportunity to come in and really talk about how the market conditions are affecting the list and all that kind of stuff.
Christian will not let me take module 7 because I have not done the prerequisite. Christian, literally, I can't take it. This is not right.
You got to pass it, Matt. I don't know. Are
Yeah,
you
no,
special?
No,
I
you got to prove that you know how to trade this system, man.
You're right. I'm wrong. Okay.
Oh, next Wednesday night, you and I, we're going to be doing that mastermind group. That's going to be a lot of fun. Yeah.
Feels like a Series 67 question.
Yeah, I think Slavic did take that series back in the day, if I remember right, Slavic, when you and I were chatting. I've never had to take one of those license tests. That's not just been my route.
Many times, but nah, I don't want to run money.
All right. Well, got a lot going on here. Obviously, Cash Flow Club tonight with Tackle Trading. You got the system. Everybody get in there and start that the quizzes and the lessons and go through it one step at a time.
By the way,
back.
If you're not reading the Tackle Today email every day, you're making a mistake.
Mm-hmm.
It is a great daily email that will keep you up to date on all things of tackle trading every single day, everything we're doing, every blog, every video series, video of the day, chart of the day, you name it. But what I loved about it is Christian just has such a amazing writing ability. And he talked about a conversation we had in this scouting report meeting from last week. And we were talking about a Brazilian company called Azul. And he writes up in the email today, and I just want to give a shout out to Coach Christian. He does a great job with that daily email. Azul, that's a Brazilian company. It means blue in Portuguese. That's Christian. I asked what is Azul, and Christian was telling me what it was. I said, really, that's interesting. What are your thoughts about the company? And Christian says, that's a shitty company. Let's buy. Go long. And the reason he said that is, as a good technician like Christian is, the technicals are more important than the fundamentals when it comes to short-term trading. And you see that nice little retracement, had it on the watch list there, and a rebreak of 28. It was on the scouting report there as well. Bad company, still breakout. Okay, breakout is greater than a bad company, correct?
Not for GE, not for there are limitations to my open-mindedness. I will say that. So I understand the sentiment. I teach that sentiment and that philosophy and that mindset, but there are times where even your opinions do get in the way. There's no doubt about it. Just not my break right there.
Are you tempted?
No, not at all. No.
What if it gets above the 50?
They could go bankrupt, Matt. They have parts of their company that literally have put them in the red in such a hole. They have to split this company up.
They got to sell off assets.
I don't care what that technical shows me right here. There's no way I'd go long.
Yeah, they have to sell off assets.
No.
They need a real CEO is what they need. Same thing.
If you're watching this, by the way, always like and share. We appreciate you getting the word out there. Halftime Crew's pretty amazing, Matt. We're getting a lot of traction on a day-by-day basis. It's a lot of fun to see the comments, you know?
Yeah, we need to get the Halftime Crew trained to hit the like button when they log in.
Well, I think a lot. Well, 22 did. We have 76 here. So, I mean, I can wait. I don't know about you.
Should we wait till we hit the 50 mark on the line?
I don't know.
We got to be better YouTubers, bro. And that was the most 2019 thing I've ever said so far year to date.
Hold that. We got to be better YouTubers, bro.
Well, whenever I've seen like a video, like my son will be watching a video on gaming, and it'll be like in bright red letters popping out, hit the like button, hit the like button. So we're not very good YouTubers.
Yeah. I just like talking markets, you know?
Yeah, so do I. But we do likes. We do like likes. It just makes us feel warm and fuzzy.
C'est la vie. All right, guys. Obviously the market actually met selling here midday. Let's get one quick peek at the intraday action as we're heading out of the halftime report. I'm seeing more weakness, more red across the board. You know, we were rallying back, but we knew that was more of a bear retracement on the intraday, Matt.
Let me just tell you what Mark said in the pre-production show today. The market was rallying, and we're on a 5-minute chart here. So the market was rallying right here into the highs. And within about 5 minutes from here, it sold off 10 points. And I think all three of us, and Mark's the one who said it, but Mark said, yeah, it's going down.
Yeah.
And, but it's still range bound, T. It's still range bound. I mean, ultimate break will be here at 24.47. 24.50. That would be the ultimate break. Your range bound, but look at that volatility the last 2 days.
Mm-hmm.
Wow.
Yeah, don't get swept up in it out there, guys. Obviously, focus on your system.
It's a tough day trading environment the last couple of days.
Stay disciplined, focus on your system, build an edge, and execute. Treat it like a business, like we do here in the Halftime Crew each and every day. Great job, Matt. Great analysis today. Appreciate it. Cody, awesome job in the production. I would love to have Mark just pop in for like 2 minutes every day and give us his quick take. It was so fun to hear his take this morning. We were just chatting about the market. Get out there, do the Tackle 25 system modules and the videos, and get in the game, Maddie.
I'll take a 49% return on that, Blake. Well done. All right. Love you guys. We'll see you back here tomorrow, same time, same channel for Friday. Fun day tomorrow. Thanks, guys.